Welcome back, everyone, and hope your new year is going well, better than Wall Street's new year here. Well, around the world, it's been the roughest start for a financial year, probably on record. I don't know. It's just been miserable worldwide. But then again, if you followed the channel here, both its predecessor channel and this one over the last 2 years, you'll know that we've been pretty much spot on with the analysis of the market. Finally turning, the red light came on for us in August of this year, and we bailed out at about the 17,400 level. We're about 16.3 now, and if anything, things are looking a little spookier out there in the marketplace, because we've still not reached that point where people can start to understand it's a worldwide problem and not just a China problem. Right now, everyone's focused on China as if China is the issue, and to a large extent it is. People think of China as a big producer of manufactured goods, but it also intakes a lot of raw material, and it also intakes a lot of capital goods and equipment to make that material, from high technology silicon wafer forming machines to Caterpillar tractors, mining equipment, generators. You can imagine all the United Technologies, Boeing, all the things that China intakes from the world, and a lot of that comes from the United States, a lot of that. So anybody here that believes that there won't be an impact from a slowdown in China has another thing coming in this country, because it's going to be marked, and it's going to be big time. And it's really funny to see that you have a couple Fed presidents still out there on the rubber chicken circuit, going around and talking about that there'll probably be a need for 3 or 4 additional interest rate hikes. Meanwhile, while he's giving his lunch and enjoying his chicken, the market's sliding off again into oblivion. So, it shows you how totally out of sync things can be sometimes. So I'm expecting a bit of a bounce this week. I wouldn't be surprised. China's, of course, a shambles. I mean, it has a circuit breakers that after, a certain 7% drop or whatever, trading is supposed to be halted. It happened 2 times, and then the Chinese just do away with the circuit breaker, right? So this is one of the real negatives of investing in countries where you have these very fluid regulations that just are willy-nilly regulations. They're never discussed. They're never talked about in open hearings in Congress and stuff. A couple guys at the People's Bank of China just get together and decide this is what we're going to do. We're going to pull off the circuit breakers, and it just continues to fuel that uncertainty that makes investing so difficult in countries that haven't really had a proven track record. So China certainly went through its overexpansive period with overbuilding of factories, overproduction of commodities, all types of things. So certainly a staggering amount of debt is going to go bad there. And the result is that the ripple waves are going to be felt throughout the world. Now, that's far different than we thought back in August, September, when we went negative on the market. We didn't quite know why. China had been okay. I mean, up until about 2 weeks ago, China was only down 1% over the previous 52 weeks. And, of course, now it's down over 16%. So fortunes changed quickly. But it shows you that markets look ahead. In other words, problems were being signaled back in July and August, but was anybody there to really listen? So that's the point. I want to talk about another thing too that I think it really exemplifies the way that people get played in markets, and I want you to pay close attention to it. One of the really salient features in the world too has been the collapse of the oil market. And right now we're hovering at 33 and change for a barrel of West Texas Intermediate crude. Yes, it's arguably cheap, but it could go cheaper. But yet when oil was $100 and $150 a barrel, the Saudi Arabian oil company called Aramco. Its roots came from the Arab American Oil Company. Well, it's all Arab owned now, but they had no inclination to sell the company to the public or take a good part of the company public. Why? Because they wanted all those glorious profits for themselves. So you never heard about Saudi Arabia wants to have a public offering of its oil company, and Goldman Sachs and all these companies are starting to line up, hoping that they're the lead sled dog to take care of this. But now, when oil prices have collapsed, and we have years of rationalization ahead, and overproduction, and calamities, and layoffs, and losses, now the big cats want to take it public. Very interesting. And this is one of the things that you really have to be careful of. Whenever an enterprise that's been highly profitable, and then suddenly the profitability gets called into question, decides for the good of the people out there that they're going to let themselves, a good chunk of themselves, go public, beware. People work from motivations of greed and self-interest, not altruism. They're not giving a part of the company away because they like you. They're giving a part of the company away, and they probably will give a pretty big chunk of the company away. They'll get a high price for it because all the big drum bangers will be out there, like the Goldman Sachs in the world. They'll be beating a drum about what a glorious investment it is to own the biggest oil fields in the world. And it's a chance you'll never see again. But I'll tell you what, it's a chance that you might be wishing that you never even heard about before. Because what's likely to happen, and what usually happens in these cases, is they hand off the football to you of the company, and you go charging into the line, and a blitz is coming the other way, and you get your head handed to you, because for the foreseeable future, it's going to be losses, 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 until there's such a point, so many years of losses, 2-3 years of losses, that the capital value of the stock is just going to go down. And what are the Saudis going to do? The insiders and the Goldman Sachs, they're gonna call their buddies at Goldman Sachs and say, you know what? I think we're going to buy our company back now, and they're going to buy it back for pennies compared to what they sold it to you before. Beware. This is the oldest game on Wall Street to give you, quote, a piece of something really good, unquote, because we like you. What a bunch of nonsense. And I've seen this game. I've been around the financial market since 1981. And I tell you, I've seen this game played out over and over and over again. And it's a dangerous and it's an ugly game. You want to feel good about oil again? Well, buy a company, buy Petrobras or something in Brazil that's a proven stock, you know, it has some seasoning and stuff, and it's already being beaten to death in the marketplace, right? Or buy an Exxon when it craters, or another one, or Occidental Petroleum, or one of them. This is the intelligent way to do things. So, just wanted to pass that little lesson on to you as part of our weekly update. Well, keep your seatbelts fastened. You know, we have some pretty hokey drivers at the wheel right now, or on the controls of this plane we call the world economy. So fasten your seatbelts. It's going to continue to be a bumpy ride. Thanks so much for watching, everyone.